So today I have a whole bunch prepared in here. Hey, Max, will you just, on that screen where you just put recorded, continue so it, there we go. Thank you so much, man. I got Max here helping me, by the way, as well. Usually I come in and I'm rolling solo unless I'm lucky enough to have Ryan in town for some reason. But today I have Max in here. And y'all are going to love this. Max, let's say that I pull up a slide, okay? Let's say that I pull up a slide and it's, I don't know, they can't read it too well. Woo-wee! Look at that. He'll just zoom right in for y'all, man. Max is on it, dude. He is on it today, which is awesome. So let's dive in, okay? The property packet, okay? The whole goal of the property packet, right? It's to provide investors with as much relevant information as possible, right? To be able to help them answer questions, really answer their questions, right? Overcome any potential concerns that they might have, and then just help them make a decision. You know, ultimately, we want to make it as easy as possible for them to decide on whether the investment that we're trying to pitch to them, if it's a good fit for them or not, right? And truly it is. Sometimes it'll be a good fit for them, sometimes it won't. Our job isn't to convince them or persuade them. Our job is to lay out this information as easy as possible, to make it as easy as possible for them to make a decision. So we need to, quickly just make a case for the investment and what we're working on, back up our claims, and then paint, once again, just an easy to understand picture as to why we're worth investing with, right? Easier said than done. But I'm going to walk you through a whole bunch from how we design the property packet to how we present the information. And there's a lot to cover. A lot of this stuff, though, anything that I feel like you can learn simply by reading, I put a lot of detail on the slide. You're not going to be able to read it too well here. That's okay. You're going to get the whole slide. I did that on purpose, okay? So it's all thinking through the process. Okay. The quote that I put in here, though, I think so. There we go. The quote, okay? What you know today is not enough for what you need to know tomorrow. Okay. I want you to think about that, right? If that's the case, right, that we don't know enough, then why should we, why should investors think that we're worth investing with, And here's my answer to that. It's because we are dedicated to always learning, always implementing, and always growing. That's why. That's why they should be, wanting to invest with us. And how do I know that y'all are those people? That's because you're here. You're here right now, and that speaks volumes about you. It's a Saturday. Now, there's a lot of things y'all can do on a Saturday, and I don't know how many people we have on the call. I can't see that number, but it looks like a bunch to me. That speaks volumes about y'all. So let's dive into the steps essentially that we need to take, okay? The 5 main steps that we're going to be covering with the property packet are the research. So research that we need to do to develop the property packet, right? Put the content in there, most relevant content. Will everyone just make sure that your mics are muted? That would be appreciative. Thank you. So the research that we need to put in there. Also the design, what it needs to look like. And I'm going to spend some time on that too because it's important, man. In my opinion, once again, the property package should just be a beautiful piece of art. We'll talk about it. Also, the layout, like how the flow goes. We'll cover that. We're going to talk about how we develop the story. The story is important. I mean, I talk about this, but every deal has a story, right? Every deal has a story. And so what is the story? How do we develop that? How do we present and tell that story, right? And then also the private money presentation, which is our opportunity to go and present the information, present the material, and overcome objections and help people move forward. Have any of you, here's another question. Have any of you seen one of my private money presentations before? None? Would you all, well, how many of you have seen one of my private money presentations and invested in one of our deals? Get your pocketbooks out, y'all. Come on. I'm just kidding. Okay. Would you guys like to see one of those recordings? Like, would you like me to send you one of those? Jackson, I'm gonna work with you after. I would love to get everybody one of the recordings because I want you to look at it from a different perspective, right? Today you would initially watch that video and that recording and you would look at it a totally different way. But after we go through everything that we're about to cover today, you'll start to see different things that we do, see different things that we cover, and you'll know why we do that. Not just that we do it, but why we do it. And that's important because if you know the why, right? If you know the why, then you can continue to redevelop and develop it for your own stuff. So, okay, so those are the 5 different things that we're gonna cover. We're gonna start with the research, okay? And my advice to you is start doing as much of this research right now as possible, as much as you possibly can. Like there is, as you're committed to an area, as you're committed to, investing into a certain location, there's so much of this information that we can start to pull right now before we even have a property. That way, when we do have a property, man, we're ready to go. We can put this information together and fly with it. So the research, different types of research. And this is the stuff that I won't spend a ton of time going through, but I will explain a little bit, okay? We need to do things like employment information. Employment information is one of the biggest indicators that we can talk about. So things like year-over-year job growth, corporations moving in, what's the unemployment rate in the area, and is that a good thing or a bad thing, right? Start finding this information, dialing in this information. And remember that all this information, everything that we're gathering is helping us understand what's the most important aspect of the story to tell. So just remember as you're gathering it, right? What's the story that we want to tell here? Population, right? So is the overall population increasing? If it's increasing, that means more people are looking for places to live. That's great. Household formations are even more relevant. That's like households once again that are forming. That is direct correlation for demand for our product. Sales comps in the area. What's the average cost per door? What are we going to pick this property up per door? Is that a good thing or a bad thing? Are we under the average or are we above, right? What's the story? Rental analysis. That's things like amenities within the market. Our competitors, what amenities do they have? What are their market rental rates? What's their unit mix on the property compared to ours? What's the city vacancy rate? Market research. Most of you should have already done market research in whatever areas you've committed to. Now it's gathering that information, structuring it out because we're about to talk about it. Okay, we also need to talk about apartment advantages. Okay, so advantages. So you'll see that some people are coming to watch your presentation, look at your property packet because they know for sure that they want to invest in apartments. It's just a matter of, is it your apartment that they want to invest in? But other people are coming because they know nothing about the advantages of investing in apartments. And so it's very important for you to understand who's on that, who would be watching this, thinking of them, once again, flipping the focus and talk to those advantages, risk versus returns, how returns from investing in real estate compared to other investment vehicles like stocks or bonds, mutual funds, retirement accounts, 401ks, REITs, like how does it compare? Up years, something like my advice to you would be perhaps something like a comparison of the number of down years, so negative return years, and up years, right? Positive returns. You're going to be hard pressed to find any investment vehicle that's going to beat the apartment space, the multifamily space with those numbers. So talking about those tax incentives, understand how to talk about the tax incentives, talking about how investing in apartments lowers their taxable income through depreciation, right? Generally the depreciation, will exceed the investor's annual distributions, which means they're not going to have to pay taxes until they receive proceeds once we exit or sell, right? How to talk about bonus depreciation. And that's a huge trigger word. Tax incentives is a huge trigger word for your investors. Home ownership. Is home ownership, the percentage of owner-occupied units, right? Is it trending up or down? If the percentage of owner-occupied units are decreasing, well, then the percentage of renter-occupied units are increasing, which obviously shows increased demand for our product. So getting as much information as we can, supply and demand. So that the combination of the factors that we just talked about, it helps tell the story of apartment demand. But there's also various other factors that will point us to the same type of conclusion. Will or will not point us to the same conclusion. Things like supply and demand. So supply requirements, like how many units need to be constructed within the area to keep up with future demand. Is that, is the demand high and they need to continue to build and build and build? That's obviously good for us too. Or is there more supply than demand? Economic impact. What's the total number of renters in the area? What, how much do they contribute to the economy? How many jobs are generated due to apartments? The economy is highly, if the economy is highly dependent on the apartment industry, well, then that obviously points to a strong, apartment market for the foreseeable future. Renter demographic is a big one as well. So if people are starting families later, which they are, and the number of families is decreasing over time, then that points to a strong demand for apartments. And immigration growth is another one. Immigration growth is one that people wouldn't think about a lot of times, but immigrants have a higher chance of renting, and they typically rent for a longer period. So if a high percentage of the population growth is due to immigration, that is a great sign for us for our apartment demand. So understand your investors are relying on you to. They're not full-time professional investors, the far majority of them. We are, though. So they're looking at us to help us to truly try to determine, leaning on our expertise, essentially, to try to determine, like, why here? Why is this the best place, right? So we need to be able to paint that picture. Okay, that's some of the research that you can do. Every one of you can do right now. Some of you probably have already done a lot of that research. That's awesome. Okay, step 2, though, is the design. Okay, step 2 is the design. And this, I believe, is so important, man. And Ryan can attest to this. Like, in fact, our whole team can attest to this. Ryan, Melissa, I don't know if Tasha's on here as well, but I stress this stuff. Like, I believe the property packet needs to be nothing short of just spectacular. Like, and my advice to you, if you're not good at designing, then don't hesitate to hire a graphic designer, hire somebody to do that. Listen, if it will make your investor deck stand out, and it will. If you hire a designer, it will absolutely make your investor deck stand out for sure. And by doing that, that's going to help you land more investors. What are we doing to set ourselves apart, right? So think of it this way. There's this theory Ryan and I literally were just talking about it yesterday. Okay, there's accumulation and utilization theory. Accumulation is more of a scarcity type mentality where you're continually just acquiring this wealth and holding on to it in fear to put it to work. But utilization is very different. Utilization means that you're putting your money to work to provide services to ourselves and to other people. And that is, in my opinion, the most direct way to achieve our goals, to increase happiness, to provide value to other people, and then just understand and realize how many opportunities, how many ways we have to increase our wealth. And I'll paint this picture too. Let's say you're raising $1 million and you spend $1,000, I don't know, as an example, $1,000 on a pitch deck. A pitch deck that has the ability to wow potential investors. 1,000 is 0.01% of $1 million. Thinking of it another way, if it gets you one investor, that's a $100,000 investor. 1,000 is 1% of 100,000, and so it gets you one $100,000 investor. Because of the design, you've likely just paid for that in and of itself. So listen, you don't have to hire a designer. I'm gonna give you some free resources right now and ways that will help you a ton. But don't be afraid in investing in things that are gonna set you apart, because it will help a ton. One thing I just saw that Zach put in here, which is a great call. He says, if you need help doing market research, reach out to Hunter and watch his coaching calls and the group coaching calls in the path. Market research, Hunter is a freaking wizard. You know who sends me market research that I plug into our property packets? Hunter. I'll have him pull a CoStar report, which will give me all this information, right? And then he'll help bullet point and summarize. Ryan. Is Ryan on the call?
I just want to say, Ty, that is a grass understatement that you are picky about the design. I mean, y'all know that this man is high maintenance, okay?
I'll reach out to him. I'll be like, hey, y'all, if you look at this text line is 0.0001. It's a little higher. It's not absolutely perfectly aligned. Like, wait, what are we doing here? Like, we got to make that short. I mean, it's like the smallest little details. I'll be like, how the shiz do you even notice that? But it's because I know.
He's not joking.
Yeah, no, it's for real. But here's why. It's because I know that it's the little things that will, set investors off. Hey, these guys, I'm trusting them with hundreds of thousands of dollars, man. I want to make sure that they're willing to pay attention to the nitty-gritty details on the property, on everything. And so they're looking, man, they're nitpicking everything. So we have to nitpick it as well, right? What I was going to say
sorry, Ty. Just really quick, what I was going to say is it goes back to what we're always preaching. This is about a team. You have a second set of eyes, a third set of eyes. There's a lot of little details that goes into anything property related, whether it's the property packet, whether it's the underwriting, the market research, whatever it is. And when you utilize your team, you have the ability to have a second set of eyes to catch these things that when you're in the weeds, you wouldn't necessarily catch. But the investor will, because they won't be in the weeds.
Yeah, that's a great point. That's a very, very good point. That's it. And so what I was going to say with Ryan was, we have negotiated, for those of you who don't know, we've negotiated with CoStar. How many of you know the CoStar options we have? So we've negotiated with CoStar. We have a subscription. We do their global subscription. And we've negotiated with CoStar to be able to share that information with you. So you need some market research. You need some, a CoStar report on a certain area, property, whatever. You have the ability to reach out to Hunter, and Hunter can help you with that. You think that would be beneficial to y'all? That'd be highly beneficial for y'all, man, for sure. Highly beneficial. Yeah, it's so good to see y'all's faces. And, I love that some of you turn your camera on, some of you don't, but freaking I love it, man. It's good to see everybody. Mitch, I see you. Mitch is right front and center of my man. It's good to see you, brother. So I love it. Okay. So once again, you don't have to pay a designer, but do not be afraid to do stuff like that, right? Okay. So your template creation. There is, and backtrack one more time too. Like I emphasize all that stuff that we just went through. I want to clarify this. I emphasize all that because I've seen so many capital raisers who struggle raising capital, and they never even contemplate, that it's because their pitch deck, their property packet sucks. They never even think that might be the case. But I promise you, it's the case. And so I want you to just be very, very clear on the design is important. Everything about that is important. So our format, though, as we're designing this, my advice is create it in a Keynote or a PowerPoint version. Or if you're having somebody design it, make sure that they design it in a Keynote PowerPoint, because it's easy to now export to a PDF to send to investors. Also, remember, we're going to do a presentation. And so being able to already have that in a presentation format is also important. So make sure that it's in a PowerPoint or a Keynote version. Also, some resources to help you with that. Canva, I don't know if any of you have used Canva before, but Canva has templates, pitch deck templates, right, that you can go in and customize and then export out. You have one that I've used, and I've used these guys for a very long time for pretty much all my Keynote templates, is this right here, Envato Elements. And you'll pay for a Keynote template. Canva, you can pay for a subscription. Some of the stuff is free, but you can get images off of Canva, videos, you can get pitch deck templates, all those kind of things. Envato Themes, you'll also pay for their template. They'll give you a Keynote template. You can search a whole bunch of them, and $20 for a template. But what I typically do is I use these actually together. So I'll get a Keynote template, but then I'll go into Canva, and Canva has some cool page designs. They have some cool text designs, and I'll kind of go back and forth with them. Or if you're going to hire somebody to do that for you, Upwork is a great way. We hire people for random jobs like that off of Upwork all the time. So Upwork is where I would direct you there. Images as well, okay? Images, those are very important, especially the images of the property. If you're going to include images of the property, it's imperative that you use high quality images. None of this grainy stuff, right? High quality images. So and we hire this out literally every single time we hire this out. We have a professional come to the property. They take pictures of the property, and they also take drone footage. And we've had a ton of success with using drone footage on our property. Lisa, I remember when we first did that on a property, wanted to have somebody come and take some drone footage and get professional photos. Lisa thought we were crazy to spend the money to do that. $500 or whatever it was. Jackson, how much do we typically, Jackson's usually the one who hires them. Jackson, how much do we typically spend on our drone footage and our photography?
Well, it's usually only $250, dude. It's really not that bad. We've built a relationship with a photographer in the Columbia area, and we use her for every deal that we do out there, and she's kind of knocked down that price for us.
Money. Okay, that's a no-brainer. And the drone footage is awesome. Oh, a resource for you, though. I don't know if you can see this very good. You can. Thumbtack.com. If you don't have a relationship with a photographer or drone or something like that, Thumbtack.com, great resource for you to find photographers in the area that can help you with that. But it'll set you apart with your property packets, though, for sure. And I'll give you an example of what one of those looks like when I show you one of our property packets. Okay. Also, best design practices. Okay. Bullet points. You'll see that when I show you, a property packet, we go walking through this, you're going to see it's not a whole bunch of text. Like, we can't expect that. So many operators, by the way, just drown their property packets with text. The chances of them reading through all that text are very minimal. very minimal. We need to use bullet points. I want you to think minimalistic, right? Just like this slide here. It's minimalistic. It has some icons. It has quick bullet points, right? It's just easy for our brain to digest. Like immediately you could look at this slide and you can see these are the most important things I need to know here, right? It's the same thing when they're looking at our property packet slides. We want to make it easy for their brains to consume. Quality photos we talked about once again. Canva has great stock options. I mentioned that. They have stock photos and videos, but once again, for the property hire professional. And then logos. Okay, every one of you hopefully have your business set up. And if you don't, get working on getting your business set up, and then make sure that you have your logos. And the bullet point here is transparent logos. Okay, and you need, and write this in your notes, you need 2 versions of a transparent logo, and I hope you understand what that looks like. But you need 2 versions. You need a light version, essentially just one that will look good on a dark background, and you need a dark version, one that will look good on a light background. You need both of those versions. Whoever designs your logo, I mean that's literally a simple. If you know Photoshop, that's a simple couple clicks and you're done. So make sure you get a light version and a dark version. I hope you understand what this looks like. Okay, this here, there we go. This right here, this is an example of transparent logos. You can see through them. Okay, non-transparent logos like this, like you can see, like it's a big difference. It just looks way better to have the transparent logos there. Makes a big difference. Also in the background, if you can see, this is an example of one of this is our Charbonneau apartments. It's actually the property packet that I'm going to show you today, by the way. But it's one of the drone footages. It just walks through the property, the details, and it really helps get a visual on the property. Your investors will love that. But transparent logos. And I want to mention one more thing along with the design, okay, is to pay attention to the details. Melissa, we just kind of mentioned this a little bit, but pay attention to just the details. The text sizing, is it congruent throughout? The spacing, is it congruent throughout? Use the same fonts. If you have a certain font for a title and a certain font for the body, any text you're doing, make sure that's the same font throughout, right? Make it congruent. And just pay attention to the details. The quote that I put in here is by George St. Pierre, and it says, when you pay attention to the details, the big picture will take care of itself. The big picture will take care of itself. And I'm going to tell you that your first property packet will be the hardest one that you do. It's because you're putting everything together, you're creating that template, you're getting the flow. But from there, you have the skeleton, right? You have the template, you have the things put together, you have the text, you put all those things through. Now it's just plugging in the information specific to whatever property you're doing the raise for. But pay attention to the details. And once again, Melissa and Tasha can just attest to this, man. I will spot things that they haven't spotted, because right now who does our property packets is Melissa and Tasha. They work very hard. I'm freaking so grateful for all the work that they put into those. And then they send it to me and I nitpick it, which means Melissa has dropped more F words at me during property packet nitpicking than ever before, okay?
Whoa.
Process.
That's reversed, okay?
Oh, that's funny. All right, okay. Now, number 3 is the layout. Number 3 is the layout. Okay, now the layout, like the flow of the property packet, understand that can change. Like there are some things that I'm going to be, pretty strict on, like your disclaimers. Your disclaimers always need to be right up at the first. Your SEC attorney will stress that as well. But it can change depending on preference. It can change depending on what's going on, what the story of the deal is. But the layout typically goes like this. Okay, these are our usual the usual sections that we have within our property packets are these sections, and I'm going to go through each one of these sections with you to give you some guidance here. Okay, cover page, disclaimers, investment highlights. Then we go into the overview, which is more detail, return summary, market overview, management team, next steps. All right, yeah, let me walk you through these. Okay, I'll go through each page. The first thing you need is your cover page, right? This is the first page of your property packet, and it should look pretty sexy. It should have the name of the apartment. It should have a picture in the background of the apartment, a good, solid picture. Once again, this is your cover. Now, I've done it a couple ways. Sometimes, if we're just being honest, sometimes the apartment's ugly. It just is. I can't get a good picture of the apartment that makes it pop. Sometimes that'll happen. So here's your hack here, okay? If that's the case, you go to Canva, and you get a picture of the city, the metro area that you're investing in. The metro area that you're investing in. Get a cool picture of the city, right? It doesn't have to be the property. I prefer the property, but it does not have to be the property. Now, as we're going through the story, you'll see that the cover page, before I click through into disclaimers, really all I'm doing here, as I'm telling the story, once again, we'll get into more detail, but just quickly, I put up here that it's the hook. We want to, I call it an open loop, or a hook, which is just this teaser, something that gets them interested and engaged. Remember, the first thing that we do is so important because it is going to determine. You'll see, as you track your stats, you'll see that some of your investors jump on to watch the presentation and they leave after 5 minutes. Some stay the entire time, and some, I'll tell you exactly where most of the people drop off and invest or not. But this hook in the beginning, something that's going to gain their attention, is going to be key to you. I'll walk you through that process. We're also going to put in some response blocks here. Charbonneau, as an example, the property packet that I'm going to show you, it was in the heat of COVID uncertainty. It was June, July of 2020, so I knew that I had to talk about COVID. I talked about how we've been tracking market indicators to make sure that we're on the right side of a market correction, and that COVID didn't necessarily cause this problem; it only exposed it. Right? I'm giving a quick little teaser hook to keep them engaged here, right? Because then I'm going to go into our disclaimers. And our disclaimers, this is just boring. I don't read through the disclaimers. There's typically 2 of them. Okay, you'll have 2 disclaimers. Where do we get the disclaimers from, by the way? Do we try to type these up, or where do we get these from?
SEC attorney.
Yeah, our SEC attorney, right? They'll give you a disclaimer. You're going to copy that text. You're going to put it in. Don't try to change anything. It's right there. But the basic of it, okay, is, yep. So 2, your general disclaimer, your financial. Your general is just, it'll say, you'll say this isn't a business plan. I simply started the business plan. It's not the offering. No investment should be made from this, presentation alone. The true offering will be done through the PPM, the private placement memorandum, where all the risks, will be outlined. And then your financial disclosure is just talking about forward-looking projections. Everything that we're about to cover, these return projections, they're forward-looking projections, based on our experience with other assets in the market and other assets that we own that are similar to this one. Okay, then this section here, the investment highlight section. This is your most important section. Your most important section. This is where you need to really think through the story that we're about to go through as well, but think through the most important elements of this story that we're about to tell. This will, I believe, it makes or breaks your presentation. You'll have investors. Most of your investors after this section will either invest or not invest. So we need to make sure that we're telling the proper story, right, in a great way. So it should highlight the most persuasive components of the investment, right? So it should highlight the favorable market advantages. It should highlight the background of the operating partners. That's very, very important. Even though they're investing in the deal, more than anything, they're investing in you, in us. So we need to make sure that we're highlighting those things and talking about those things. We should talk about the downside protection that apartments, bring, and this specific property brings. The waterfall, if it's a favorable waterfall to investors get X percentage of the deal, and this preferred return, and really anything else that you think or anticipate that your investor base is going to find important or interesting, right? I promise you this will start to make a clearer picture as we start going through. But our typical slides in the investment highlights area will usually have this major slide, this main slide here. There we go, which is bullet points, the major highlights, like number of units, purchase price, projected returns, location, the total equity raise. That's the first slide typically in the investment highlights section. And then we'll talk about market advantages, essentially just why we chose this market. This one right here, this is the 4 influencers. That's what it looks like. Hey, this is what's happening within the government. This is happening in the area. This is why this is important, right? Return highlights, obviously very important as well. The return highlights will usually be the cash flow breakdown. And you can't see this very well here, but you will when I walk you through the property packet. It just breaks down what we expect to distribute cash flow each year. And then equity, it shows the cash flow breakdown. It shows their equity gains. It will show what the cumulative return will be. It's a great slide. I'll show it to you. And then I usually always place our GP track record, which is like something like this, right? Our team track, how many units they're in, the market that we're in, or how many assets we have under management. I always place that typically right after the return highlights. It allows us to response block any concerns. It gives us an opportunity to talk about how dedicated we are to actually hitting those returns. So I place that right under. And then the last slide that I usually end with is just a quick investment strategy. So, is it value add? Is it stabilized asset? Is it a major reposition? How long is the hold period on the property? I'll talk about the details of the debt piece a lot of times too. Hey, this Freddie Mac loan, Fannie Mae loan, this many years. This is what the interest rate is, especially right now because interest rates are very attractive. And then the asset class is an A, B, C, D asset and an A, B, C, D area. So other things that you can discuss, other things that you can cover. Waterfall breakdown. I think I did mention that, but I think that's very important to cover. How they're getting paid, what our investment minimums are, like how much our investment minimums are. I would say the due date. That's another important one. Is the investment due date. Okay, so when do they need to have their wire in? When do they need to have their investment in? Distribution timing. So when should they expect to see their first distribution? These are all when I go through common investor questions and concerns. I have a whole slide for you. You'll see that all these things, like when they're getting their first distribution. These are some of your most common questions. So we want to make sure that we cover it up front for them. And then your next steps. What do they need to do? Where do they do from there? Okay, my advice to you is this. You have to give them permission to invest and that they don't have to stay for the whole presentation. Like you go watch my presentation and I'll say something like this. I'll say, I'll get to the investment highlights and I'll say, hey man, I know that, those are the major highlights. I know that some of you want every single nitty gritty detail and I'm in it for the long haul. So I'm going to go through all of that with you. But some of you, most of you, in fact, we look at how long you guys stay on the recording and what you're looking at and when you break away, and most of you break away at this point right here and you go and you make your investment. That's awesome. But for those of you who want to get into the nitty gritty details, let's go and we'll start diving in, right? But give them permission to go and make their investment. Wire their funds, Don't think that they have to call you every time. Okay, number 4 is now we get into the nitty gritty details, the investment overview. So this is more in depth typically on the property itself. So how we'll execute the business plan, I'll get into like property location details. So the exterior details, how many buildings there are, what amenities do we have, how does that compare to our competitors, what do we need to add there, right? So interior details as well. What's our unit mix? Are they classic or renovated units? Are they premium units? What are our rents and what do we need to do to be able to get it to market, up to market rates? And then just basic things with how the business plan will be executed. Things like the exterior value adds we'll put on the property, the interior value adds, operational value adds, right? Just essentially more details as to Like I just saw a question here too. Can we obtain a sample of one you created? Absolutely. Yeah, I'll send you. I promise you, you'll get that kind of stuff when we send out the presentation slides, the PDF. We're also going to send you a recording of one of the presentations so you can see how all this stuff plays out in an actual live presentation. Okay, so yes, for sure. Okay, there's your investment overview section. Now your return summary. The goal of this section, okay, is to provide just in detail the opportunities, financial projections, and performance. And this is another very, very important slide, by the way, because this is one of those individuals, those investors who need the nitty-gritty details. This is the section. This is the section they're looking for. They love the market stats. That's great. They love the investment overview. That's great. But I'm going to tell you what they love more than anything is they want to know how have you come up with the return projections and are they conservative, right? So I usually start out by outlining the sources and uses, like this slide here in the middle, and I'll explain once again how I do that, how I walk through it, and then I'll go into the current financials. So where we have the current financials, and then from there we go into the 5-year pro forma and projections. And once again, it's really the 5-year pro forma and projections that's most important here. Like it'll show that slide shows you how you got your return projections, what your assumptions were, like your key assumptions essentially. They're the most important determiners. Is determiners a word? Determiners. I got some yeses and some no's. Y'all don't know. None of y'all know. I don't know what Melissa said, but I guarantee I'll tell you right now, vocabulary, I'm not taking any advice from Melissa on vocabulary, okay? Grammar, come on, Melissa.
That's okay. All right.
Determiners, I'm using it. Determining factors, the key assumptions, the most important determining factors, okay? Your equity breakdown is very similar, by the way. Your equity breakdown slide, same type of thing. It just talks about instead of the income and expenses, it talks more towards the, the exit, once we exit the whole period. Another just crucial aspect those, and I'll once again explain just kind of how we break those down, how we go through. Once again, that's for your seasoned investors, it's a big deal for you. And then you have your market overview. Okay, the slide, the market overview slide really allows you to show off a little bit. This is why I like to keep something within the market overview slide within our highlights too. But market overview allows you to just show off a little. Like very few people are going to know what you know when it comes to their market. Even if they live in the market, very few people are going to know what you know about their market, which will allow you to show off a little bit. It's a great way to build some credibility. So we'll cover things like state indicators, the metro indicators, what's happening in the state, what's happening in the metro that's favorable. We'll cover demographics. I'll give you some examples of these things, I promise you. And then just market comparables. Market comparables allow you to explain your return projections. So we'll go through, rent comparables and sales comparables. And listen, that's another key aspect too. Sometimes your rent comparables are going to look awesome. You're far below market rents. Sometimes your rent comparables aren't going to be like, it's not going to look too sexy. It's not going to be anything that's like really stands out. But all of a sudden you'll look at your sales comparables and your sales comparables, they'll stand out. So listen, I'm not going to, if my sales comparables stand out but my rent comparables don't, well, I might still include both of those. I'm still going to include both of those, but I'm going to tell you where the bulk of my story is going to be, my sales comparables. I'm going to talk about the sales comparables, why that's important. Remember, there's a million things we can talk about, but we need to talk about the most relevant, most important factors in a concise way, right? So your market slide allows you to show off a little bit. And then usually the last slides that we go through before introducing them to the next steps is the management team. So we go through the track record, and this will it helps you prove proof of concept. The proof of concept has been established, that you've done this before. And if you haven't done this before, who should have a track record? Somebody on your team should have a track record. Who is that?
Sponsor.
Yeah, sponsors, other partners, but your sponsor will definitely have a track record. They have to have a track record to be a sponsor. So make sure, I'm going to tell you, your job might be to put the property packet together and do the presentation. And their job may just be the sponsor. Who knows? Maybe they don't have some of this information put together. Make them put it together. I'm going to tell you, it will help you a ton. It'll pay huge dividends to have them put this together. So the track record, it should outline portfolio details like how many number of units, your total asset value, how many deals have they taken full cycle, average occupancy among current properties, and then bullet point returns as well. Hey, this is what we've projected returns on average, what we projected our returns will be, and this is what the actual returns have been, right? What we've actually hit. One other thing that I do here is if I have not hit the returns. If I have a property where I projected this and I didn't hit the returns, if I hit the returns, so you'll see on this slide, well, none of these slides have one like this, but if I've hit the return or exceeded it, it's just in regular white text like everything else. But if I have not hit the return, if it's come in less than I projected, then I put it in red. Now, I'm not trying to hide it, I'm putting it in red. And I'll tell you why I do that, is because it's frame control and it's response blocks. If they think that you're trying to hide something, then you've immediately lost credibility, you've lost trust. No, I highlight it. Hey, this is a property, this is, Newellcrest as an example. I don't know, one that I've underperformed on, right? Okay, this is a property that I've underperformed on. This is what happened here. This is what I learned here. This is how this has impacted future properties since then and why I've been able to, exceed returns there. So, once again, just bullet pointing that you've learned different things is not a bad thing. And then your bios and headshots, you don't have to provide your entire life story in the bio section, okay? It's just make sure to introduce yourself to potential investors and highlight the most important business accomplishments. I look at it like resumes, so Funded Me, I'll get resumes for individuals applying for jobs, and they'll have every job that they've ever had on there. You know, I Taco Bell when I was 15 years old, and everything up until now they're 37. It's like, leave that shit off, you know? Keep the most important stuff, the best highlights there, put them in there, and move forward, right? So highlight the important stuff there. And then definitely any business accomplishments, and then anything that, you know, especially anything that would be closely related to, you know, the offering or the business, obviously. One thing I want you to note is your bio length, okay? Put this down. It shouldn't be, it should usually be 100 to 200 words on each key team member, okay? 100 to 200, shouldn't really be any more than that. It's hard to fit any more than that on a slide anyway. So 100 to 200, get concise with it. And then once again, just remember, man, most passive investors, they're not full-time real estate professionals. So they're deferring to your expertise to a certain degree. So you don't need, once again, every single detail about everything you've learned in the business and everything you've learned about this specific, offering that we're walking them through, just the highlights here. And then your headshots, get a professional headshot. Okay, go get a professional headshot. If you have any ugly team members, just leave them off the property packet. Okay, only put the attractive ones in there. I haven't been on property packets in years. The Sons of Bees won't let me in there, man. It's a bunch of crap. Okay, put your headshots in. There's your management team, and then your next step. Okay, next steps. Really simple, just outlines what they need to do next. It's acknowledging that they've made it through the presentation, and we can assume that they'll know exactly what to do. So literally, we outline it. Hey, you've reviewed the offering, great job. If you haven't reviewed, go review it. Okay, now within your data room, we have a data room that they go to. So within your data room, you're going to see a green button that says View Subscription Package. Click that. Once you click that, you're going to be able to fill out the docs. Then sign and wire. Like once again, just basic step them through or walk them through the process there, and then your next steps. Their next steps. Okay, meaning their investment minimums, when funds are due by, when their first distribution will be, highlighting those things again. That's your flow. That's your content flow, right? Okay. It is, I think we're going to take a quick break before we get into it, because these next little bits are going to be longer, okay? So before we take the break, though, do we have any, I want to make sure that I'm covering any questions on what we just covered. So if you can unmute your mic if you want to. We'll take a few minutes for questions. You can type them in the chat if you want to as well. In fact, I'm going to ask you, Jackson, what's the best way? How do you want me to handle questions right here?
Really, it's totally up to you, man. If you want to do a Q&A section where people unmute their mic, that works too. If we could use the raise your hand feature on the bottom bar there, you'll see the reactions with the smiley face with the plus sign. If you click on that, you can raise your hand. That way I know who's in line and who we can have unmute their mic and ask questions. Dalton, that's perfect. Thank you for raising your hand. That's perfect. Dalton, if you want to unmute your mic and ask a question, that'd be awesome.
Cool. All right. So I asked it in the chat, so I'm just going to repeat it. So when we're highlighting the actual track record, especially if we're brand new to this, and we're highlighting our sponsors' specific track record, how would you best speak to that so that you're not sounding like you're just speaking to someone else's track record and you're kind of owning it as your own as well?
Hey, that's a great question, by the way, man. That's a great question. And this whole way through, you'll see when you watch my recording, this whole way through, I'm not talking about me at all. In fact, it's very rare that I ever even talk about me. I'm talking about my team, us, them. In fact, if anything, I'm giving credit to everyone else anyway. So obviously now most of the track record is our track record, but it's not even the focus. It's, hey, as a team, and it's, hey, man, Lisa and Greg are our partners. A lot of you know Lisa and Greg, they're our partners on pretty much every deal we do in the Carolinas. I talk about Lisa and Greg far more than I even talk about Ryan and I. So the cool thing is you're doing this presentation. I want you to think of it as you're just the voice here, right? You're putting it aside and you're talking about your team, them, us, we, but it's them. That's not a bad thing. That's a great thing for sure. It's humility, it's nobody wants to just feel like you're getting up there and taking the credit for everything your team has done. So even if it isn't yours and it's just the team and they're seeing you give credit to your team, then that's a beautiful thing, man, not a bad thing. Does that help, Dalton?
Yeah, thank you.
Yeah, no stress. Great question.
Alfonso's got his hand raised. Alfonso, if you want to mute your mic, ask your question.
Hey, good afternoon, Tyler.
What's up, Alfonso?
Hey, I had a quick question as far as presenting to sponsors. Out of the sections that you went through, which would be the best to present to them as far as a likely deal that they might want to get on?
Will you say that one more time?
As far as the sections that you went through, which would be the most advantageous to present to them as far as if they would like to get on with you?
And you're talking about the sponsor, correct?
Correct.
Yeah, so, I would still look at the investment highlight section as the most important aspect there. Because your investment highlight section is covering, and this will be a little bit more clear as we dive into it, but it's these, I'm covering like everything that I'm about to go through in detail, in the investment overview, the market overview. I'm covering all those things, but I'm just doing it at the most short and condensed, most important version there. So it's, hey, this is why this is what's happening within the market. This is why that's so great. This is what's happening on this property. This is how we source this property. This is why that's so great. This is why it's could be a great fit. Okay. And so as you know those stats and you know those details and you can talk to them, I'm going to press the hell out of every sponsor that you're trying to pitch that to, for sure.
Okay, and the majority of that I could get from CoStar that you mentioned?
CoStar's one resource for you. I look at, Melissa can attest to this too, but I look at a bunch, man. I'm looking at, and I'm actually going to probably pause on it for a second, because when I get into more of the story, this next section we're about to go into, I'll talk a little bit more in detail about this, but I'm looking at the things that help me tell the story. So I look at the Economic Development Committee. I'll go to their website, and what do they have on the website? I'll call Economic Development Committee, and they're going to talk to me about certain things that are happening within the state or within the city. So CoStar definitely helps. There's freaking tons of information there, but I'm going deeper than that for sure.
Okay, appreciate it.
No worries.
One more question before break, Ty?
I got one. All right, is somebody raise their hand?
Yes, Janaina, go ahead.
Okay, Janaina.
Then I'll take yours too, Kim.
Hi. I have a question in reference to the when you talk about the clairvoyant and the pictures from the property. Some of the properties that were said have all of that in it. Can we pick some of that out and use it in our presentation? Or is that
Absolutely.
okay?
Yep. So for example, we're selling a property right now called Signal Hill, and we to put that together, we stress with the broker that we want the offering memorandum to look great, man, because it's the same thing now. Now we're pitching it to investor to somebody who's trying to come and buy this property, and so it's the same thing, man. We stress to the broker. His name's Ron. Hey, Ron, I want this offering memorandum to freaking pop, look sexy, because I know that's going to drive in more offers, higher offers. Let's make this happen. And so Ron has went out and he has got professional pictures and drone footage and all these things that we've talked about. And so any of these, the buyer that comes in, if they request that, we'll absolutely give it to them. It's the same thing with you. If they have those pictures, even though it's in the offering memorandum, we need the actual files. We need the actual files of those pictures. If you request them, they'll give them to you for sure.
Thank you.
Yeah, no worries. All right, Kim, go ahead.
Sorry, real quick, with Alfonso's, and then we're going to get into the story, so maybe you'll cover it there, so maybe I jumped the gun. But just wondering, so the market research and all this detail that's going to go into the property package, does somebody else do that, or do you do it as a whole team? Do you split it up? Whose role is that to gather all this?
Great question, dude. That's a great question. Okay, so, and it depends on what stage in the process you're at, right? Right now, for me, it's a lot easier because I have a lot, a lot more people to help. Melissa, Tasha, Hunter, Zach, Ryan, all of us pitch in, but from the very beginning, there's somebody that's assigned, right? This is your role. And in the very beginning, my role was always, and I still do the presentation. I still, have a very big role in the property packet, but that was especially in the beginning, that was my role, man, for sure. And so I owned it, and it was my job to find that information. So I would talk to different team members. I would talk to Ryan. Hey, Ryan, tell me what you're seeing with the underwriting from before we ever get on a team call with Lisa or whoever other partners. I want you to tell me what are the value adds you're seeing from the underwriting? What are the most important things about this deal that you're seeing from the underwriting? And then I'd be taking notes. Okay. Then I call Lisa. Hey, Lisa, tell me the story of this deal. How did we, why do you love this deal? What are you seeing, at the property? What are you seeing with the seller? What do you know about the seller? And I'm just taking notes, asking questions, picking their mind. Then we get together as a team, and we usually have a team call. And now it's picking through the most important aspects of the deal. Hey, what's going on, right? Especially now for me, because I don't go and see every single property before I used to, but now I don't. And so now a lot of times I haven't been there. So most of my research has been, online. And so I need to really rely on other team members to let me know what's really happening at the property. What does it look like? What's, retail around? Is there things that I'm not seeing through online research? So it's a mixture of all those things, Kim. And it's truly I'm looking for something. It's my job, right? So this whole time, even now, it's still my job to create the story. And so as we're asking these questions, it's my job I'm trying to figure out what's going to tell the best story. I want all this information, then I want to know what's going to tell the best story, and that's the story I'm going to tell. So, does that answer that question?
Definitely. Love it. Thank you.
No worries. Okay. I'll take some more questions once we get back to, just in case we missed any. But how long, maybe a 10-minute break? Is a 10-minute break okay with y'all? Or depends on what stage in the process you're at, right? Right now, for me, it's a lot easier because I have a lot, a lot more people to help. Melissa, Tasha, Hunter, Zach, Ryan, all of us pitch in. But from the very beginning, there's somebody that's assigned, right? This is your role. And in the very beginning, my role was always, and I still do the presentation. I still, have a very big role in the property packet, but that was especially in the beginning, that was my role, man, for sure. And so I owned it. It was my job to find that information. So I would talk to different team members. I would talk to Ryan. Hey, Ryan, tell me what you're seeing with the underwriting from before we ever get on a team call with Lisa or whoever other partners. I want you to tell me what are the value adds you're seeing from the underwriting? What are the most important things about this deal that you're seeing from the underwriting? And then I'll be taking notes. Okay. Then I call Lisa. Hey, Lisa, tell me the story of this deal. Do you love this deal? What are you seeing, at the property? What are you seeing with the seller? What do you know about the seller? And I'm just taking notes, asking questions, picking their mind. Then we get together as a team. And we usually have a team call. And now it's picking through the most important aspects of the deal. Hey, what's going on, right? Especially now for me, because I don't go and see every single property before I used to, but now I don't. And so now a lot of times I haven't been there. So most of my research has been, online. And so I need to really rely on other team members to let me know what's really happening at the property. What does it look like? What's, retail around? Is there things that I'm not seeing through online research? So it's a mixture of all those things, Kim. And it's truly I'm looking for something. It's my job, right? So this whole time, even now, it's still my job to create the story. And so as we're asking these questions, it's my job I'm trying to figure out what's going to tell the best story. I want all this information, then I want to know what's going to tell the best story, and that's the story I'm going to tell. So, does that answer that question?
Definitely. Love it. Thank you.
No worries. Okay. I'll take some more questions once we get back to, just in case we missed any. But how long, maybe a 10-minute break? Is a 10-minute break okay with y'all? Or do you need longer than that? 10 good? Okay. Let's do 10-minute break. So that is, what time is it now?
Quarter after the hour.
Quarter after the hour. We'll see y'all back here ready to roll. Sound good? Hey, come ready though, because there's a lot that we're about to go through. So grab some coffee, put your seatbelts on. It's about to get real, okay? All right, I'll see y'all. learn from them and what make us so valuable as a partnership. How we've overcome those mistakes and how we've other unforeseen problems is what makes us confident in our ability to meet and exceed returns. And let's be honest, things never go as planned. Executing the business plan and exceeding return projections is in direct correlation with the operator's ability and willingness to solve problems. Outside circumstances will inevitably affect the path, but it's up to us to make sure that they don't affect the destination. Once again, ownership. So, and once again, one of the concerns that you'll see in the list as you go read through it is how have you handled unforeseen issues? How have you handled challenges? Are you committed to handling challenges? All those things that I just went through, y'all, are response blocks. Every single one of them are response blocks to the questions and things that you'll have in your list when you get the slides here. You'll see them. And you'll see that every one of them are response blocks to help overcome concerns and answer questions, all of them. So we also know that our ability and willingness to problem solve is how we've continually exceeded return projections and why you continue to invest with us. And I hope you know how grateful we are for that. Always show gratitude to your investors, man. Always. Listen, these investor relationships are sacred, man. They're sacred. And even though we want there to be some push-pull here, gratitude is a rare thing. It's a rare thing in today's world. There's a lot of entitlement. Gratitude's a rarity. You show gratitude to your investors, these are individuals who are, trusting you with hundreds of thousands of dollars, millions of dollars. Show some gratitude. So I always do that. And that isn't fake, man. None of that's fake. That is for real. I am so grateful. And so, and I mentioned that, the last bit here is, hey, there's zero chance that we've been able to acquire over 150 million worth of real estate without your continued partnership. Some of you have invested in every single one of those acquisitions. So we're continually, and it plays a huge role in why we continually have the investment, these investments presented to us, putting us in a position to continue to get these. So whether you're, be joining us on this one or not, thank you, and then bring it full circle for those of you who haven't invested with us yet. And that section right there, I do it on almost every single presentation that I've ever given, which is thanking them. And then I tie it in. Hey, so those of you who haven't invested with us yet, it's about time. Where have you been for hell's sakes? We've been waiting for y'all. Excited to have you on board for this one. All of you know us somehow, and then I'll quickly introduce the major key principles on the deal. Quickly, high level overview. Greg, Lisa, this is what they do. Ryan and I, this is what we do. Sarah, this is her role. Quickly. Then the last bullet point here is a quick snapshot of the returns. Okay, so quick snapshot of the returns, meaning your track record. So here's now, and all of this is outlined later in the property packet. I let them know that. So hey, all of these are outlined later in the property packet. I usually give them the pages. We've taken 6 properties full cycle with the 7th under contract, scheduled to close shortly. Our average cash on cash return to investors, 9.7%, which exceeds our average projected return of 7.85%. Okay, averaged annualized rate of return, also known as ARR. I try to make sure that I explain everything too, if there's ever a term or an acronym or something, is a whopping 77.28%. Okay, that's your averaged annualized rate of return. But let's pause there for a second. That is high. That's very high. It's almost unbelievably high. And so investors, I know for sure, some investors will look at that and be like, bullshit. What? No way. And so if that's the case, I want to clarify it. If I ever think that something's going to be out of whack, I want to clarify it. So I do. And I say, hey, I have to clarify though. Okay, I have to clarify that is inflated by a property called Newell Crest that Greg and Lisa used creative financing on. Long story short, they turned $45,000 into $800,000. So I do not want any of you to have that expectation on this deal. Okay, not any of you. So the average annualized rate of return amongst other assets, if you take that out, 34.3%, which still exceeds our average return projection of 22.71, and that equates to 9.6 million of equity created on deals we've taken full cycle. Then I talk about our current assets that we have under management just quickly, 133 million, average occupancy 94.25, and we've created over 16 million of equity on those properties. Last one is quickly the business. This is quick right here. It's, hey, as I mentioned earlier, the sellers are needing to exit. Honestly, it's kind of sad. I mentioned one more aspect of the story, which is how a partner passed away. I said, hey, apparently the partner that held the real estate or managed the real estate holdings passed away unexpectedly. The rest of the partnership didn't really know how to manage the portfolio, no idea how to handle real estate. So they're literally just fire selling all the different real estate holdings that they have. Their strategy on this property has been to eliminate capital improvements and retain tenants by offering lower market rents. Our strategy is to obviously capitalize off of that horrible strategy. Like, we'll be assuming a debt piece that they put in place 3 years ago as a Fannie Mae loan with a 10-year term, fixed rate 4.32%. The loan will expire in 2027, which falls right in line with our 5 to 7 year hold period. And to their credit, I'll tell you this, the seller's strategy to retain tenants worked, and the property is nearly 100% occupied, has economic vacancy of less than 5%. That being said, their current loss to lease is a whopping $183,000. In a nutshell, our strategy will be to improve operations by implementing proper policies and procedures, maximize rent increases by upgrading the interior to a premium product, cleaning up the exterior for increased curb appeal, and then adding or upgrading amenities to improve community and renter satisfaction. Those improvements I'll show you in greater detail, but they break down to about $7,500 per unit and play a big role into our return projections that we'll have. Okay, then remember the investment overview. We just went through the highlights. Okay, that took a lot longer to walk you through the highlights than it would take me to give the presentation, right? Once again, I want to do that in 15 minutes, 20 minutes, maybe 15 minutes really, that's my goal. And because it's the most important details of the deal, and I want them to be able to make a decision on are they wanting to move forward. And so from this point on is where we start getting into a bunch of the nitty-gritty details of the property and how we operate the property and strategies, and that's for your more advanced investors. So at this point right here, I'll stop and I'll say, hey, there's the major highlights. You know, we always look at, you know, where most people fall off and move forward to invest. This is where most of you do that. You know, most of you highlights. Some of you want every nitty-gritty detail, though. Hey, listen, man, I'm in it for the long haul. I have no idea if you drop off, or this is being pre-recorded, so I have no idea if you drop off or stay on. So no stress there. You're not going to hurt my feelings. But if you want to, you know, if you have the information you need, essentially, go ahead and click the button in the top right. You can go and, you know, finish your investment. Those of you who want every nitty-gritty detail, let's go, and they'll dive in. So give them the opportunity, the permission to go make that investment. Okay, I want to pause there before we get into in a little bit deeper. That's a lot. I just lambasted you with a shitload of information. Okay, so do we have any questions or anything that you want me to cover or clarify at this point?
Tyler, I have one quick question.
Yep.
Hey, how you doing? I think you covered this for the most part, but you were talking about the return projections, right? And how you actually frame that as a seasoned investor and your track record and so forth, and which sounded great. Now for a newbie, like myself with a new team and all that stuff, how would we best frame that?
So you'll still have return track record, because once again, your sponsor will have a track record. So you're still going to have that, and you're going to frame it and talk about it literally the same way that I just did. Because you now together, I now becomes we as you're walking through this. It's our track record, it's our portfolio, it's our returns, right? So you're still talking the same way. That's, once again, a sponsor will be a big deal. You have to have one. They'll have a track record. Make sure that we're talking to the highlights of that track record and what's going on there. But it's the same thing. Now, if my sponsor's track record isn't that extensive and it's a smaller deal and a newer sponsor and it's just me, I'm still going to talk about I'm going to explain my frame, which my frame is that I am newer and I'm very dedicated to getting the returns, and I'm dedicated to getting the returns because I know that, man, every single one of you play a huge role in how I continue to progress and grow in this business. And so I'm going to paint the same pictures as in line with my frame that I explained earlier. But once again, the question that you just asked is a question that every single person on this call has. But it all comes down, once again, you're going to have a sponsor. That sponsor is going to have a track record. And so when you're pitching this to investors, that becomes we, not I. It's all talking to that same thing. But I'll also say this. If you're obviously our track record is a big point of the story. It's a big portion of the story because we have a solid track record. We have solid returns. If that was not a big portion of the story, meaning we didn't have a track record or we didn't have solid returns, then it would not be a major focus of the story that I tell. Does that make sense?
That makes a lot of sense. Just needed some reinforcement in that area. Thanks.
Yeah, no worries. Instead, we're going to talk about the deal and the location and the strategies and what we're going to be doing and all that kind of stuff instead. It's you talk to the main points of the story that we have. If that makes sense. Any others?
Yes, Alfonso, you have your hand raised. If you want to unmute your mic and ask your question, go ahead.
Hey, Tyler. Can you kind of speak on how you actually prepare for this presentation? I know you have notes. Do you actually have a script? Do you do it in front of the mirror? Like for the people who are unarticulate, like how do you prepare for something like this?
Great question. And this is actually one of the things that I forgot to mention earlier. I freaking love this question. So I prepare, I'll tell you one of my biggest fears. It's still a fear today, but like in the beginning, I mean, holy shit, dude, definitely a huge fear, which was just, I didn't want to look like an idiot. And so I prepared like crazy. And so I'll tell you in the beginning, dude, I would have like literally like a script, like literally I would like type it out like a script, like this is what I'm going to, but then I realized, and it's funny because giving you guys this presentation right now, I couldn't really remember like what I talked on or what I said. So I actually went through, re-listened to my presentation and then put those, like retyped it out in my notes so that I made sure that I didn't skip anything as I'm teaching you guys this. That's what I did. But that's not usually what I do. Usually it's bullet points. And I'm going to talk to some of these bullet points because now like I know the details and I know the talking points and I know what I'm going through. And so it's just these bullet points, and it allows me to ad lib a little bit more, to add a little bit more personality in and to flex and flow. But in the beginning, I didn't want to flex and flow. I didn't want to have anything that I was going to ad lib. I wanted to freaking make sure I didn't F it up. And so I literally would type that thing out, dude, in my notes. And every slide, and this is important for you too, every slide you have presenter notes, okay? So as I'm sharing my screen and, like even right now, when you guys see this, there's another screen right in front of me that shows my presenter notes, which is my bullet points, so that I remember what to talk on. It's the same thing when I'm doing my investor presentation. They're seeing the screen, but I'm looking right at my presenter notes to make sure that I'm walking through the processes, right? That I'm not skipping any steps, any important bullet points. So now it's bullet points. It used to be script, but I'm going to tell you the beautiful thing about bullet points. Okay, why you put those notes into your presentation is because remember, you might not be the only person that's having a conversation with investors that have watched this presentation. You're also not going to always remember everything that you've talked about in the presentation. It's very rare you're going to remember all that. A lot of times the blur as you're doing it. So having the notes in there. Now, let's say I get on the call with Darian. Okay? Darian jumps on the call. He wants to ask me a couple questions. He's like, hey, Tyler, on page 17 of the property packet, you have been mentioning about XYZ. Can you go into more detail? And I'll pull up I literally pull up my presentation, and before I ever call an investor, I have it there so that I can immediately scroll to whatever page that I'm going to go to, whatever page they're asking questions about, or whatever questions they have. I've already thought through the answers to their questions. I've already done all that one time to put together the story of the deal. And so now I'll hurry and go to that page that I have my bullet points, and I'll answer those questions, talk to those logical points. And my other team members who will also be talking to investors can also do the exact same thing and benefit from the notes that I've taken and the bullet points that I've made, and be able to make sure that we're all on the same page, that we all have the same message, that we're all on the same page, that investors are getting the same message all across the board. So that's how I do that. I don't practice in a mirror, but I'll tell you one thing that I do like to do is be able to see myself as I'm giving the presentation. Because remember, you're not going to be able to see anyone during the presentation. You're pre-recording this thing. And so being able to see yourself, as weird as it is, it gives you some energy. It reminds you if you're not smiling. It reminds you if you look too serious. It reminds you if you look like you're not having fun, So it provides some energy back. But I'll also say, last thing I'll say to answer this question is, your first one, dude, now, the last private money presentation I just did was Prosper Fairways, and I did it just like this, and I had my bullet points. I went in, it was 50 minutes, and I went in front to back, never stopped. It was full the whole way through and never had to redo. It was full. I didn't stop at all. It's the first time, y'all, that's the first time in any time that I've ever done an investor presentation where I've been able to make it from start to finish without stopping, chucking my phone, saying, cuss words and restarting. Okay. Usually I have to do that a whole bunch of times, especially in the beginning. And then you get into your flow. So when you have to restart or you have to, keep this portion, then start back up where you were, dude, don't stress about those kind of things. It's going to happen for sure. That's the beauty of recording it, pre-recording it. You can start and stop and redo and do different sections without having to go through, full, start to finish. That was a long-winded answer to that question, but did that answer that question?
Yes, it does.
Okay, sweet.
Hi, I got a question for you, man.
What's up, Dennis Garza? My
How's
man.
How's it going? I'm curious to know what's the juice you bring to the table when you're entering a new market. Primarily from an investor standpoint, yes, but primarily from a lending standpoint, because I noticed that that was kind of a hurdle or hiccup that we had to jump. So, how do you best leverage that?
How do I say it again? How do I talk about going into a new market that I don't have properties in? Is that the question?
Properties and or experience, or even somebody other than the property management team to be boots on the ground.
And you're talking about this is to investors, correct?
Yeah, you could be talking to investors, but then also I was curious on how you handle that, from a lender's perspective.
I'd actually say it's pretty similar, both sides, by the way, to investors and lenders, where it's using logic. Like, what's the plan? Like, truly, what is the plan? But I want to cover that if we're going in, once again, if we're going into a new market, okay, and I don't have team members there, I don't have any other properties there, and we're branching into that market. Okay, that's going to be a concern. I want to make sure that I know that that's a concern, which means I'm going to develop response blocks. And the best way to develop the response block, or your frame, if you will, as well, is why are you, like, truly define why are you going into that market? Why does it make sense? Like, truly define it, man. And I'll literally write it out. Hey, I'm going into this market because of these stats and these things. And this is what I see happening. And this is the trend. And this is what I see going on in the future. And this is why, man, it's so much easier to go into these other markets that we already have team members in. But I can't deny these factors here. And so we're diving in because of X, Y, Z. Now, what we're going to do, this is something, just so you know, Dennis, I have to cover every single investor presentation that I give, which is, I live in Maui, dude. And I'm going to tell you, that's a concern for my investors every time. They're like, well, this dude's in Maui. Like, what the frick? Is he going to even, like, how does he know what's going on at the properties? So I'm going to address that. Boots on the ground team certainly help. But I talk about the plan. Hey, I fly in and see the properties. I fly in and oversee every, usually once a quarter, where my other team members will go more regularly to the property. And when we take over the property, we'll have this team member, Lisa, Greg, Ryan, whoever that team member is. When we take over, they'll be there for takeover, and they're going to be walking through and implementing the business plan with the property management company. And every single month, that same team member is going to go and continue to oversee things and make sure that we have things going well there. I might even build a relationship with somebody in the area that can go and walk through the property randomly for me to make sure that I'm getting a second set of eyes on that that's not just ownership eyes. And then I'm going to go and we're going to have property management calls every single week, dialing in what's going on, tracking the numbers. I look at the numbers every Friday. They send what's called, a box score. I'm just walking them through how I'm going to stay on top of it. That same type of thing. Does that make sense? DG?
Oh yeah, sorry, I couldn't find the mute button. Yeah, no, that makes a lot of sense. That's super clear. So yeah, no, appreciate it.
No worries, man. Congrats on closing yesterday, man. Dennis just closed on his first deal, 79 units, Tulsa.
I appreciate that.
He calls me yesterday and he's like, Tyler, I'm a fellow apartment owner, bro. I'm a fellow apartment owner. I own apartments, It was awesome. I loved it. All right.
Yeah, that was a tricky one that we had ran into, but I was like, man, why do these people keep asking, what's up with, why do you want to come into the market? I'm like, because it's amazing. That's why.
But you know what? It's funny because now you know from a lender perspective and an investor perspective that may be a question. And so now you'll be able to response block it up front and remove it, remove it. That way you're not on the defense. So. All right. Okay, I'm going to keep going. I know that we're supposed to be wrapping up like right around now. I really want to just show you, I'm not going to spend a ton of time going through the rest of the investment overview stuff. I just want to quickly show you some of it. And then the major part that I want to get to is the return section, okay? And just point out a couple things with the return section, because once again, that's most people will drop here and either go invest, but I want to help you understand just a couple bullet points on the frame with how we cover returns. But your investment overview, I typically talk about some of the neighborhood aspect, the general neighborhood aspect, what's going on, retail around the area, off the freeway here, just conveniences, right? Then we go into more of a detailed view of the property. Hey, this is the property layout here, the parcel layout, essentially. This is where things are. You drive in, right? You see the leasing office and the pool. This is the pros and the cons. The pool isn't even working. It overlooks this beautiful quarry lake that we own. So what we'll do is we'll clean up the pool. Like I'm just talking about the plan, right? And how the current owner has not done a good job with the plan. Then we'll go into interior stuff. So, hey, there's some deferred maintenance. The property's beautiful though. There's a grilling area, blah, blah, blah. We're going to go in and we're going to change some. I said interior, but I mean exterior. When you go in, these are the exterior upgrades that we'll do. We'll put in a dog park and we're validating why we're doing that. Like look at some of the amenities that our competitors have. They have these amenities like a dog park or pool furniture or whatever that we don't have. So we're going to add some of that stuff in. And then on this one, I did this too, which was, it just says, get rid of this guy. Oh, I don't know why that didn't work for some reason. But anyway, it talks about, we took a picture of this crappy truck that's on the property and talked about how we're going to get rid of this thing and clean up the exterior on it, right? Just once again, bring in more movement onto the slides. Then we're going to go into the interior upgrades. We're going to talk about why we're doing these interiors. More than anything through this section, I want to help them understand logically why we're doing it. Like we're not just going in and increasing these to a premium unit just because. I'm not going to go in and put in wood laminate flooring just because. I'm doing that because it allows me to bring rents up to where I need them to be. I'm doing this because it allows us to, compete. It's all logic. When you go through and you watch, what I'll do when we share the presentation, I'll share this presentation, Charbonneau's, so you can get an understanding once again in a more live setting from the example that I just walked you through, but the logic behind it. Okay, then once again, this is more our investment strategy side. So, we're going to go in. These are the three, I guess, major drivers on the deal. We talk about our property management company, our relationship with them, how our takeover process goes, how we'll solve problems. I always try to cover the takeover process here too. I do that because it talks about this response blocks as well. It's operational strategies and talks about how we're going to take care of tenants, how we mitigate risk. The takeover process that I walk through is all about mitigating risk. So I want to walk through and help them understand that that's a big portion of ours to mitigate risk. Then this is the CapEx breakdown, bullet pointed. This is exactly how we're going to be spending the money. I want to make that as clear as possible on where the money's going. And then we get into the return summary. This is where I want to spend a little bit before we wrap up here. The return summary, once again, it's all about, there's two aspects here. It's what our pro forma, what our projections are. How do we come up with those? And then it's also going to bullet point what we're getting paid, our acquisition fee, those kind of things. So I want to make sure how we cover those are very important with your frame and how it comes across, okay? So I'll get here and I'll say, okay, hey, this is what you guys, this is the important part. This is what you guys are, have been waiting for anyway. Let's get into the nitty-gritty details here. So this is how we're going to be using, the $4 million of equity that we'll be raising. The down payment will be a little more than 25%. It'll keep the property well leveraged. A little over $1 million will be used for capital improvements. We just outlined that. But then this, okay, the acquisition fee. Remember, this is what we're getting paid. So I don't undercut this. I don't blow past it. I am very clear with it. It's like this. Acquisition fee. The acquisition fee is the fee that gets paid to us as sponsors and operators for putting the deal together, guaranteeing the loan. That will be $375,000. There's also a guarantee fee that is $75,000. That's what gets paid to us as sponsors. If it's $375,622, I'm going to say the exact number because I'm not afraid of what that number is. My frame is rock solid. Like, we get this acquisition fee because we deserve the acquisition fee. And there's no question or doubts or concerns about it. So that is, like, you read it exactly how it is. It's one of the things that I want to point out to you. Like, read it how it is. Don't undercut it. Don't be shy about that. And then closing costs, $112,500 for closing costs, 1% for loan points. And then we also keep a property tax and capital reserve, in case of any emergency, for a grand total of $4 million. Okay, then your breakdown. Okay, so this is where we're at in year one. Or this is where we're at, in takeover. This is where we'll be at in year one by bringing about 30% of the units to a premium product. Here's how this breaks down. Okay, your 7-year pro forma. This was 7-year pro forma that we did. And once again, this is for your nitty-gritty investors. They are looking at how you explain these things. And so I bullet point exactly. Like, as I'm going through this, I wish I could show you my notes slide, but it literally bullet points all the major projections. Like, it says this: rent growth. Okay, rent growth will have the most impact as we're increasing rents to market rates. Year one, 16%. That's aggressive. I acknowledge that that's aggressive. But then year two, we scale that down to 5%, 5% in year three, 4% in year four. And by year five, we're pretty much just inflating with or increasing the rents with inflation. So we start aggressive here because that's where the bulk of the work needs to be done, and we'll be doing the major interior improvements. Then it scales down very, very conservatively. Okay, vacancy. Year one, we have 3%, but as we continue to increase rents, we're going to increase that to 5%, and we keep it at 5% vacancy through the remainder of the hold. Right now, remember, it's 100% occupied, but we always account for vacancy because there will be some as we continue to increase rents. Concessions, we've accounted for 1% in concessions in year one. Bad debt, I'm going literally line by line. Bad debt is receivable. It's no longer collectible. Things like rents that didn't get paid, we estimate that at 1% each year. Non-revenue units, these are units that are non-revenue producing, such as model units, and we account for those here and not in vacancy. And just explaining it, right? And then for expenses, we account for a 2% increase for each line item each year. We found that gives us enough of a buffer to hit our projections. The only line item that doesn't increase by 2% is the management fee, which stays at 4% all the way throughout. Payroll, I talked about the payroll on the property, what it is per door, and then the lender requirement for capital expenditures. Talk about how the debt service is fixed. Talk about what the final cash flow before taxes are, and then once again, just wrap up how conservative they are. Hey, we're confident in our ability to capitalize off of below market rents in year one, but we're very realistic with our rent increases for years 3 and 5. After we bring back up to market rents. So just conservative, but once again, explaining the logic behind it. This slide is no emotion; it's all logic, dude. It's all logic. That's what your investors who are here for are looking for. Then we break down how this looks for the snapshot of their returns. So once again, equity partners receive a 7% preferred return. And then I clarified it again and said, hey, remember, this return is backed by the acquisition fee that's in the escrow account in year one. I also mentioned how here you'll see the preferred return that we've accounted for. And I explained how we've only accounted for the base preferred return. Once again, I want them to know we're conservative. So hey, you'll see on our projections here, we only account for the base preferred return through our cash flow projections. Now, we plan on exceeding all those things, but for your returns that you're seeing, these projected returns that we're giving you, it's only based on the very, very bare minimum preferred return here. Once again, conservative, paint the picture, go into the equity side and talk about how, we've accounted for 5% for resale costs. I talk about a 1% disposition fee to us as investors, talk about repaying, and then talk about what they'll get on their side after the whole period. Okay.
Hey, Tyler, I got a question.
Yep.
Do you ever cover cost segregation at this point in time when you're going over the financials?
Usually, I cover cost segregation. Where I put it in kind of varies. Sometimes I'll mention it up front. Like I'm pretty sure on Prosper Fairways, cost segregation, bonus appreciation was a huge aspect of that deal. I think I covered it right in the highlight section. But if I don't cover it in the highlight section, yeah, I'm definitely going to cover it in the return section. The tax incentives of the deal, once again, the apartment advantages of the deal, and how their cash flow returns, how that's tax deferred, and how that will how they won't be able to or won't have to pay taxes on those kind of things. Yes, for sure.
Cool.
But be prepared, though. I will tell you this: when you bring that up, cost segregation, a more seasoned investor is going to ask you, have you done a cost seg study? If so, what did that come out at? If not, when are you going to get that done? And you have to be able to make sure that you're prepared to talk about it. So if you're not the best at talking about cost segregation or tax stuff, then call your accountant, have them write you up something on how it works. Write you up something. And then you can read it, study it, press talking about it, and then go implement. Okay.
That's critical. Thank you.
Yeah, no worries. That's where I'm going to end on this one, okay? That's where I'm going to end. The rest of the stuff I really go through in my presentation. I go through the market overview pretty quick. Once again, it's a way to flex a little bit. Just flex a little bit, but I already flexed a little bit in the beginning. When I walked through the 4 major influencers. This is a way for us to do that again right before we get into next steps. I usually go through it pretty quick. I do not go through, by the way, right? So let me pull these open here. Our track record, I'm just going to show you what this looks like. On how this is breaks down how all of our past assets went, what they are, where they're at now. Like it's all there, but I never go through those details. In the presentation, I just tell them that they're there. They can go read through it. That's it. And then I get into next steps, let them know that if they have any questions, they can reach out and where to reach out to, thank them for being on the call. And then once again, just turn it over to them to go make it happen. Like I assume that every single one of them are going to take the next steps, but it's not like you cannot seem needy at that point. You have to be confident, frame strong once again at that point. Okay. That's so much, man. So much. I know it's so much. Remember, you're not going to remember all this that we just went through. I, more than anything, want to point it out to you. You can come back and read or, rewatch this section as you're preparing for yours. We'll send you a real recording of one of my presentations, and you'll be able to see why and how I do things. And that's my point. I want you to be able to understand there's strategic processes between why and how we do things. And now you know. But we'll go through this again in another time, I promise you, because it's just too much to cover in one section. But let's cover some questions just in case we have some more questions here. Y'all look tired as hell. I told you to put your seatbelt on and get some coffee before we got into this section. I told you it was going to be a lot, okay?
What's up,
Darian, go ahead.
I'm not robotic tonight, am I, Jackson?
No, you're not. I can hear you perfect now.
Okay, what's
up? What's up, Darian? Good to see you, my man.
What's up, Uncle Ty? Your uncle.
Uncle Ty, I love it, dude.
Yeah, I appreciate you for this presentation. First off, my question is, when going into these, when we reach this point, of course, we have to start working on this, as Melissa says. Different partners going into deals. What is your advice on presenting or putting together these property packages and the partners to add on as well, and the size of the partners and the team on the deal?
We try to. So I love this question. I saw actually this question asked on the Facebook page. I feel like I'll tell you that partnerships are so important, right? And partnerships are so valuable because it allows you to divide and conquer. But there is this point where it gets too much, man. Because if you have too many partners on a deal, it's very hard to get in sync with what's going on the deal and what the decisions should be made on the deal. And so it's this balancing act. The balancing act is what roles can each individual take, and you want to keep that as concise as possible with individuals that you truly feel like you mesh with, right? You truly feel like you mesh with. And one of the best ways to make sure that you mesh well with other people, or that you identify who you're meshing with, is to be yourself, man. is to be yourself. But my advice, man, the more partners, I'm just telling you, the more partners you have on a deal, the more that's going to get watered down, confusing. It's actually, it wouldn't necessarily be a pro on the deal to your investors. That they'll start to grill you on how you all work together and how often have you worked together and who's going to be doing what and who do they turn to here. And so I know it's a vague answer, but it's kind of a, you'll start to fill that out more and more. But you want partners, but not a ton of partners, I guess is the basic answer there.
I appreciate that. Thank you.
No worries, man. But I want you to understand too, for all of y'all, like as you're looking for sponsors, think about this. One of the questions earlier was sponsors. And, I had an interesting experience, I guess, where these individuals were pitching us a deal to sponsor, and they didn't have anything prepared. We're talking nothing. So we asked them questions, right? We asked them questions on, hey, what's this, what's that? And they did not know the answers to those questions. And then they started to, anyway, it was just a fiasco a little bit, right? And dude, that happens. Like, my gosh, I've fallen in that same thing where I don't know the answers. But what's interesting about that is we decided not to sponsor. We gave them feedback, and then we never heard from them again. Never heard from them again. And then we do hear from them again. And we asked them, they're, you know how I recorded a video the other day about asking for help and reaching out, right? Well, I recorded that because of this interaction that I'm telling you about right now. And their answer was this: we didn't want to call. We didn't want to call because we were pissed, and we didn't want to call, and we didn't want to ask for help because we didn't, want to have those conversations. We wanted to keep going through on our own or doing it this way because, it wasn't a good, interaction, a good experience, whatever. Well, man, alive, that's how we learn. That's how we learn and we grow. But I paint that picture for each and every person on this call because I want you to think about what you just learned right here. Even if it's not pitching this deal or your deal to investors, and you just created just the highlights section to pitch to your sponsors. If you just took the steps to do the initial research to just pitch that, hey, this is why we're in this market, this is why we like this deal, this is why it's important, this is why it's an absolute home run for you, and you covered just the little bits of the highlight section that we talked about, you'll have sponsors clamoring to do business with you because you're weaponized with information. So when you truly realize what we just went through there, that is going to help you a ton when you present it to investors and to sponsors.
Thank you. It was vital. Thank you.
No worries, brother. It's good to see you, man.
Likewise.
All right. Anybody else?
I don't know where my
Yes.
hand button. Sorry, Jackson.
It's okay, Kim. You can unmute your mic and ask your question. Feel free.
Okay. I just wanted to say we should have done this a couple Saturdays ago because I totally bombed my first investor interview. I don't know if you see my video, Tyler. I got on directly after and I was sweating. I was like, oh my God, yeah. I showed no personality. Probably sound like a robot.
Oh, dude, now I have to go watch it. I imagine you're being too hard on yourself because I don't know if you know how to not show personality, Kim.
I was I didn't even want to talk. I thought I was going to stutter. I was like, oh man. So, yeah. I was sweating.
Listen,
I heard you did awesome.
Oh, did Zach tell you? Zach watched it for me. And it was horrible because the sun, I get the sun really bad. Is the hottest time of the day and the sun's coming down and I was literally sweating in my office. Yeah. So anyway, it's okay. I'm going to take all this and we learn for the next one for sure. Thank you.
I love it. That's it. Learn, implement, fail, evolve. Something like that from some wise guy named Dallas Pruitt, right? But listen, it's so much easier. I'm telling you, man, it's so much easier when it's me right here talking to you about how it should all go. But dude, if you're really I don't know if Alec is on this call, but Alec was in this office, watched me do a number of investor presentations, and he can attest to the same feelings that I had there, Kim, I promise you. Same feelings, man. It just is. Also, one thing that I'll mention too on top of this is you keep your notes in your presenter notes, and then you do a live webinar. The live webinar, man, is way more fun, in my opinion, because now I've already done the presentation. I've went through that more robotic stuff that is just to a camera, but now it's a live presentation. But you're out of your mind if you don't think that I have my presentation pulled up the whole time and scrolling through to those different slides with those bullet points the whole way through every time I'm getting asked a question to make sure I don't miss anything or misrepresent. So keeping your notes in the presenter notes area will help you and serve you and pay huge dividends as you do an investor webinar as well.
So Tyler, I have another one, quick one.
Yeah.
So I imagine during some of our one of your presentation, you get asked questions that you just never thought about or have the answer to, right? How do you deal with those situations?
Great question. I love that, man. I'll tell you how most people will deal with questions they don't know is they will try to BS it. But you cannot do that, man. You cannot do that. I'll tell you exactly how. Somebody, once again, it's your frame, right? So let's say I'm on an investor webinar, somebody asks me a question, and I don't know the answer to the question. It's exactly this. That's a great question. Honestly, I don't know the answer to that question. I appreciate you bringing that up. I'll tell you what I've done. I've actually made a note here. As soon as we're done with the webinar, I know exactly where to turn and where to look to grab that question or that answer for you. So let me pull it and I'll get right back to you with it, okay? But I own it and I thank them for bringing up the question. Because here's what you don't want to do. You don't want to just feel like you're the know-it-all, right? That'll paint you into a corner that is really hard corner to get out of, man. I'll tell you that right now. And the other side is gratitude. Once again, like if they've asked me a question and I don't know the answer to it, I'm not embarrassed that I don't know the answer to it, even though internally I might be freaking mortified that I didn't know the answer to that question. But on the external, on the outside, I don't let that show, right? It's, oh man, I have no idea what the answer to that question is. Let me go take a look. Thanks for bringing that up, by the way. I didn't even think about that. Man, yeah, thank you, blah, blah, blah. Or like, so just acknowledge, just own it, man. Just own it. And then what you do next, though, is very important, which is you go get the answer as fast as possible and bring it back to them. And if you do that, it will be more valuable than if you would have known the answer up front anyway. Because they're going to see how you react to certain things, how quickly you go and get information, and how you pivot when needed. So you can totally turn that into a positive, man, for sure.
Awesome. Thank you.
No worries, man. Alfonso, go ahead. I see your hand up.
Yes, sir. Me again.
Good. I love it.
So obviously, given these presentations is something that's delegatable. Is there a tactical reason why you choose to do it yourself? Because I feel like maybe I don't resonate with people who have $100,000+ in the bank. I mean, I feel like I'm funny, but maybe other people don't, you know? So is there a reason behind you decided to take on this role as far as a presentator?
Yep. I did feel like it aligned with my strengths. I feel like, you know, Ryan and any of you, well, all of you probably know this at this point, but Ryan's better at every aspect of this business than I am. Like he just is, man. He's very good operator and everything. This is something that was definitely more in line with my strength and thinking through the process. I love to tell stories, you know, and I really sincerely, man, I look at this as just a straight up story that you're telling your investors. And it's a factual story, but it's how you present it. And so I love that kind of stuff. Like I thoroughly enjoy it. I really enjoy it. And so that's why I decided to do that. I also am a bit of a control freak sometimes. And I want to make sure, just a little bit sometimes, not just, I mean, all the time, but sometimes, but definitely all the time. And so I want to make sure that whatever message is being delivered, that I am, that I'm delivering the message that needs to be delivered. Because I want to make sure that investors have the proper expectations. I want to make sure that, so that's why. There's a number of reasons why I do it, Alfonso, but it aligns with my strength. But you know what's funny, though, is I never once thought about what you just said, which is, you know, I don't know if I align with people who have hundreds of thousands of dollars to invest or whatever, but you have to, I never thought about that. I never thought like, holy shit, man, this person I'm talking right now is way richer than me. Jeez almighty, man, I got to keep it together right now. Never even crossed my mind. But what's interesting is that even if it would have, it's never going to change, because no matter what stage you get to, there's always going to be people that are at a bigger stage, a higher stage than you, period. So it's like, understand, they're not looking at you as somebody who's very, very wealthy. They're not looking at you expecting you to be very, very, very wealthy or just as wealthy as them or as a competition or, hey, I'm not going to invest with this person if they don't have as much money as I am. Any individual who has acquired wealth knows what it takes to acquire wealth. And so you need to talk to those terms. And what it takes to acquire wealth is being committed, is being a troubleshooting, it's taking ownership, it's all those things. You talk to those things, that's way more important than the number in your bank account.
Okay. Appreciate it.
No worries.
Tyler, you're a control freak too?
Just a little bit, man. Just a little bit. I'm getting better, though. I will say I'm getting better. Go ahead. I see another hand. I don't see the name on the hand for this one for some reason. Oh, Dalal. There we go. Is it Dalal? Did I pronounce it right?
It's Kira. It's just Kira. I couldn't change my name on the Zoom. It's my middle name. So I have a question. I'm jumping back to partners. And I have a question because I'm a little confused about that. Like, can we have a partner that we met at the seminar, like the 3 days classes? Can we be partner with them?
Sure. Somebody like a partner on your deal, you mean?
Yes.
No, totally. Definitely. That's a beautiful part of the net. Yes.
Hi.
No question.
Hi. And also I have, would you advise us to be partner with someone that took the mentorship or not?
I think it's strengths. You look at somebody who's going through the mentorship certainly helps, man, because they're getting this guidance and direction and on the same page. But it's also strengths, strengths and weaknesses. Like Dennis Garza is a great example of this. Him and Daryl met each other at their first event. Yeah. And I don't know how that conversation, Daryl, maybe you can even, or Dennis, maybe you can even talk to. Did you guys, I'd imagine you didn't determine that at the event. You guys determined it afterwards. How did you guys do that, Dennis? You answer that question if you don't mind.
Yeah, absolutely. So we met at the event and we exchanged, information just through networking. And Daryl had a few deals that he had, spoken to brokers to. And just, from our conversation, he knew that I had a background that was pretty good with numbers, running, a business day to day. So he wanted me to overlook them. I looked them over, and there was a few pieces of information that, I was able to retain that I brought to his attention. And he was like, "Hey, man, you ever think about just partnering up?" And I was like, "You bet." I will say this, and Tyler's probably going to love it, but I will say this. If you are going to partner up with somebody, I highly recommend that you partner up with somebody who's got a lot of skin in the game, who, is very close to the same tier package that you purchase for the multifamily mindset, because I've noticed it's made, a tremendous difference. So we have other partners on the deal who are not from our class, who are also elite level members. We just have, our interests aligned, and that much more to try and, get these deals closed. So yeah, Tyler, shameless plug for you there, my friend, but it's truly, sincerely how I feel about it.
Thanks. And Dennis, one question: how many partners you had in the deal?
Yeah, so it started with myself and Daryl. We actually got into PSA from there, and then added sponsors, and then the team grew to a total of 6 because we actually added a second property right behind it, and found that we were going to be a little light, if you will, to be able to get them both across the finish line. So added the team members that we needed in those crucial areas.
Got it. Thank you, Denise.
I love it. All right. Anybody else?
Well, awesome. I guess we'll wrap it up there. Ty, is there anything else you wanted to share before we end it?
Yes. I love being able to jump on here and chat with y'all, man. I want to make it more of I need to do it more, man. I'm telling you, I get so much from y'all. So much, man. So much I love it so much. So it's a very humbling thing, dude, to have as many of you on the call. I don't even know how many there is, but a bunch of you on the call for as long as we've been on the call. And I love it, man. I sincerely am so grateful for every single thing that you guys do in the network as well. I'm going to tell you that I watch the Facebook page and I look at the questions that are being asked and how everyone pitches in to answer. I'll tell you my vision, my vision, I guess, was that I wanted to create this environment that everyone just saw that giving is the best way to receive. The best way to get is to give. But I mean, you never know though, right? How people are going to take that and will they really run with it. And man, I'm so grateful for every single one of you and just the value that you bring to the network every single day. It's more than I ever initially envisioned. I love y'all. I'm grateful for you guys. And I couldn't be more sincere about that. So thank you so much, man. I know that I lamb blasted you. I know that you guys need to go take a nap right now. But we'll dive in and we will do this again and get into some more details again. So thank you guys so much for sure.
Awesome. If you can unmute our mics, let's unmute our mics and give Ty a round of applause. Tyler, thank you for your time.
Thank you.
Thank you, Tyler.
Tyler.
Thank you.
Thank you so much.
Hey, snap a picture, go post on social. Here's what you need to be doing. Here's what you need to be doing. Max back here, it's so funny. Max back here just gave me this reminder. You guys need to snap a picture, go post on social, talking about what you've just learned about investor relations and how to take care of investors and how to go and present the information. Once again, it opens up opportunities for your investors to go and comment and ask you questions, and it gives them permission to do that. So every single one of you should do that. Max is on fire, always reminding me to, because I'm the worst at doing that. If you see posts on my social, most of the time it's because Max has done that and reminded me to do it. So go make it happen for sure. We'll see y'all soon. Go raise some money. Go kill it. So
have a nice day.